The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
Fed Chair Jerome Powell says he is under federal criminal investigation amid the central bank's $2.5 billion renovation, laying the blame firmly at the door of President Donald Trump and warning the central bank's independence is at stake.
Iran warns it will retaliate if the US attacks after President Trump reportedly considers military intervention as hundreds are killed in the country's biggest anti-government protests in years. And deal done. After only a quarter of a century of talks, the EU is set to create the world's largest free trade area with its Mercosur agreement, despite fierce opposition from farmers across the bloc.
We had a glimpse of where that headline story may go earlier last year. Back in July, we had the hard helmet clash when we saw the tour from the president having a look at the Federal Reserve building, and there were the cost overruns, and the two had a clash over exactly what those overruns looked like. But now we've extended into, is this an independence of the central bank issue? We know there have been constant clashes around the role of Powell and whether he's cutting interest rates quickly enough to satisfy the president. And of course, other big positions have been up for grabs in recent times. But I think the markets are now starting to react slightly, looking at the dollar trade, looking at whether we escalate here from the yield. The market, I think, is on tenterhooks around this move.
Look, what does the president want? Look, I don't know if Jay Powell's guilty or not. I have a sneaky idea, and I think most of you out there have a sneaky idea whether Jay Powell is guilty of some form of criminal act in his testimony to Congress last year about this renovation, which has gone over budget. OK, I think we've all got a strong idea, but I am not a legal expert, so I'm going to park that. But what does Donald Trump want? Donald Trump wants cheaper money. That's if we go right down to strip everything away, he wants the cost of the extraordinary government finances, which have accumulated under Democrat and Republican leadership. He wants cheaper money, right?
Not a cheaper building.
I mean, cheaper. What like the ballroom?
Not a cheaper.
Like the ballroom that's being created just up the road from the Federal Reserve. I won't go there on that. But I'm just trying to go to the nub of this. He wants cheaper money. Mm-hmm. And Jay Powell is denying him his request for vastly cheaper money in terms of the cost of servicing and renewing sovereign debt. The problem for the president, and this is what I've learned from all the amazing experts we speak to, that if you basically have cheaper money when it's not warranted, and there are inflation concerns out there, and there are other concerns out there as well, and if you get the wrong balance, then money doesn't get cheaper, money gets more expensive. Money gets more expensive because when you're renewing, and at the moment the government renews on it's about a 7-year average maturity. Your longer term paper, which you'd love to have longer terms, you don't want it renewing all the time if possible. Your longer term paper is more divorced from the underlying interest rate, which you pestered the chair of the Federal Reserve to get. People worry about the fiscal position, people worry about the inflationary outlook, people worry about all kinds of other factors that go into it as well. So actually, whilst the president is trying for one thing, his actions may actually get something completely different, the opposite of what he's asking for. It may well get more expensive money. So the sensitivity of bond yields at the longer end, where the president would like to have most of the debt, or any president would like to have more of the debt as well, becomes more about the fiscal position and concern about inflation. So this could be unbelievably a Pyrrhic victory, and I'll let people look that up if they don't know what it means, if indeed the president gets what he wants.
Yeah, indeed.
That for me is the nub of it.
Well, it is that 10-year yield the market is now watching, whether there's some sensitivity, whether some sort of risk premium has to be priced into that 10-year yield. That's what the market is watching. And ironically, last week we saw the stock market again racing ahead. We had some very decent ranges, fresh peaks that we saw on the S&P 500 to the Dow. But the markets that get set this week now looking to see how far this story can run and whether it could derail some of the risk appetite we've seen on markets so far for 2026.
So, the US Federal Reserve Chair Jerome Powell said he's under criminal investigation focused on the $2.5 billion renovation of the central bank's HQ and his related congressional testimony. In a video statement, Mr. Powell said the probe is a result of US President Donald Trump's ongoing frustration with the Fed over interest rates. He also warned of the threat to the Fed's independence.
No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
Jay Powell there. Let's take a look at futures. Early on this morning, they are looking weaker, so we're expecting to snap some of the green we saw late last week. The S&P 500 picking up where the Dow left off and taking the market to fresh peaks. But as you can see, a reversal anticipated this morning. A look at the Treasury market. It was the 10-year we were focused on. The 2s, the 5s, the 10s there on the board. You can see the 10-year is higher, 4.18%. That's what we're closely watching if there is a true test to central bank independence here. The dollar reaction, it's weaker. We're seeing a drift against the euro and sterling this morning. So we're down by about 1/3% as euro picks up some speed, along with sterling also perched higher by the same percentage. Dollar still holding its own versus the Japanese yen. And when it comes to the Swissy, though, giving back territory, the Swissy is firmer on that trade too. To gold, and again, we've seen a lot of discussions around the level for spot prices this year, and gold has been escalating right from the outset, 4,578. So we've picked up more than 1% early hours this morning.
Add something on that gold, something that's really irked me, and I just want to remind myself while I still remember it as well. Right. I love the copy at the moment. The copy says gold rallying because about concerns about the central bank independence. What a load of... I'm glad I'm not a headline writer, because that's just nonsense, isn't it? Gold rallying because gold's rallying is the headline. I know it's boring to write. Gold's rallying because of momentum trade. Gold isn't rallying because of anything that's happened in the world. Gold's rallying because it's going up.
Yeah, and central bank buying is still bolstering. We've seen almost doubling of central bank buying.
But the CB buying has been consistent for years. This is purely a momentum trade.
It stepped up in recent years, but almost doubled in recent years from what it had been prior to the decade.
But the rally has come since then, not because of that.
A number of factors, I think, at play. Let's take a look at how futures are also perched this morning here in Europe. We are also looking somewhat cautious, and don't forget we had fresh highs in the session Friday for the Stock 600. We saw it on the DAX as well, 9 straight sessions. So what we're seeing this morning, just an element of caution. Steve Englander has joined us, Global G10 FX Research and North American Macro Strategy, Standard Chartered. Steve, plenty to keep you busy, not just the central bank independence story, but the data that's been rolling through as well on the labour market at a time when we're looking for some leadership from the central bank and some integrity here, while we just muddle through the data. How are you thinking about the optics?
Well, I think the central bank leadership thing and the subpoena could blow over a little bit, because the headlines were very dramatic, and seeing Powell on television rejecting the accusations was certainly, it's the first time he's been so straightforward and sort of denouncing what's happening. Doesn't
it just put something out there to the market so he's willing to pop his head up this time and push back aggressively?
It does. On the other hand, if you're a district attorney, you can subpoena your neighbor's dog. Okay. And so it's not, that by itself isn't going to change anything in the market. However, if they do hand down an indictment, That would be interesting, but we have to see whether they go that far. The accusations just, don't seem to have that much merit, but we'll have to see. Maybe they found something, who knows.
Steve, I want again, I hear what you're saying, and I hope it does all blow over, because, we don't want to find that the chair of the most important central bank in the world has got a criminal problem. Most of us don't think so, but again, none of us are legal experts, so let's just not go there on this one. One thing I do want to talk about is Fed independence and central bank independence. Now, I believe in a degree of central bank independence, but I don't believe for one moment that central banks are independent. And I think in an era of fiscal dominance, when the concern is these enormous deficits, and I'm not talking about the United States, I'm talking about globally, and these enormous debt loads that the sovereigns are building up, is that what we're entering, or what we're already in, an era where fiscal dominance, and actually the central bank has to respond to the government position rather than the inflationary concerns as its primary objective?
I think that there are a few central banks that are independent over the medium term. You look at Biden's appointees. Over time, he put in a bunch of people who sort of very much sympathized with the views that he had. Some of them were, very clear Democrats who went on to, Democrat positions once they left the Fed. The issue is the speed with which Trump is trying to do it. And obviously he has the midterms right in front of him. He wants to get interest rates down. I think he's trying to intimidate the Fed, either by, giving Powell the Maduro option of retiring and this all goes away, or, trying to get him off. Unlike with Lisa Cook, this time there's an actual accusation as opposed to just, stuff you're throwing into the air. I think all central, you can ask how independent is the ECB. There are plenty of European.
Absolutely, that's why I said all of them, yeah.
Yeah.
But Steve, my point about losing control of the longer end, which I made at the top of the show as well, if you're not careful and you lose credibility and you are seen as your currency being more fiat-like as well, which is obviously why people look at the alternatives, and we mentioned gold earlier on as well. That is what my concern would be, is that if the US establishment, whether it be the Fed or the government, lose control of the longer end, that would be the biggest problem for all markets.
I think it would be, but I think it takes a lot of doing to lose control of the long end. For example, the QE option is always there. And, you don't have to call it QE, and you don't have to say, look, we live in a world of fiscal dominance, but you can find some reason to make it painful for the market if they think that they can sell the long end with abandon.
So the question is how the story unravels from here. We've got Lisa Cook and that decision for the Supreme Court in the next 2 weeks. If we are talking about a challenge, it could be back-to-back challenges here from Powell to Lisa Cook. If we're talking about the longer term out throughout 26, does Powell stay after his term expires as the head of the Federal Reserve? Does he stay on now because he pushes back against Trump? How does this play out for the rest of this year?
Well, my guess, and everybody's guessing, is that he stays on for a while to establish the principle that, term as chair is not coincident with your term on the board. Being a board member after you've been chair is not kind of that much fun.
It feels like a demotion, doesn't it?
Yeah, and so I don't think he would stay, that long. On the other hand, once you get past the midterms, if it turns out that the Democrats regain control of at least one house, it becomes much harder to push through the sorts of fiscal things that Trump is trying to get through.
The big important question is what happens to interest rates from here, because that was the whole point of the conversation. Do we get lower interest rates? Does Trump get what he wants in the form of much lower borrowing costs? And if you look at the data, it is so mixed. The labor market, no hire, no fire, implications from the immigration story, and what we're seeing in terms of any resilience stateside because of the tariff policy that is really back to what the president has been pushing for over the course of 2025. What do you think happens on the data front, and will it be conducive to 2 rate cuts this year?
We don't think so. And can I throw some optimism into the conversation?
Sure.
Well, I had a grandson just before the year end, and my Montreal Canadiens are winning in ice hockey. So, but there's also a story in markets, which is if we are lucky and oil prices come down, and that enables us to really utilize AI technology to its fullest, because it's very energy intensive and there are no limits on what we do. And we could be entering into a new era of productivity growth. And already the productivity data are signaling that, even before the influence of AI, that something is happening. And that could end up being the most powerful driver. It's a long-term thing, not a short-term thing. Data-wise, I worry a bit about the CPIs that are coming up. That the November was looked a little bit too good to be true. So it could be that we're going to see some upward pressure, in the numbers. And to be clear, we actually don't expect the Fed to cut anymore. We think we're done.
Well, that's fascinating, because I think for a lot of people who are looking to finance the market, that would be very bad news. I want to go back to some of the economic theory as well, because you are the perfect person to speak to about this as well. You mentioned that losing control of the long end would be problematic because you have so many tools available, including QE. But then another derivative of that is the concern over the dollar as well. So whilst the Fed could keep control, perhaps, or certainly rein on the longer end yields, the destiny of the dollar could also be problematic, because a lot of us, like the United Kingdom, we are committed to basically the largesse or benevolence of strangers buying our paper as well. Do you have concerns about the level of the dollar? Now, the dollar index, to be fair, has kind of steadied off a little bit as of late, but by and large, it's still under pressure.
Well, we expect dollar strength. Because we think we buy into the good news story, and we think that will keep real interest rates high, but in a good sort of way, because it will reflect the productivity of capital, the marginal productivity of labor, and so it's going to be a benign level of higher rates, not kind of the Fed tightening. But I am concerned about the dollar. One is that if that productivity story doesn't happen, we've never owed so much money abroad, and we've never had such a high fiscal deficit in, sort of basically at close to full employment. That, if you say, look, Steve, you're wrong, productivity growth is going to stay where it's been the last 10 years, nothing's going to improve, there's a real risk that the dollar comes down. Having said that, you mentioned the UK, we've mentioned the ECB, you can throw Japan into this picture as well, and you mentioned gold before. In some ways, I think what you're seeing is this concern about fiat currencies, which is that, they all have fiscal issues. Even Europe has fiscal issues. It all looks like they're under pressure to keep rates down. I mean, Europe obviously has the political issues with the conservative wing and sort of much more Eurosceptic wing. So ECB probably wants to give it as much support as it can going into the rounds of elections that we're seeing. It's not just a rejection of the dollar that we're seeing. I think it's a rejection of a lot of currencies where you say, look, the chickens are kind of coming home to roost. They may not come home the exact same day, but you can sort of see them flying in the distance.
Let me ask you then about some of the other currencies for this year. What do you think is going to be something investors need to pay attention to? Because we keep talking about everything from a dollar lens, but are there implications for policy in Japan? The fiscal changes we're seeing in Japan, more hawkish BOJ. Are there implications here in Europe as we talk about more fiscal coming from the German side? I mean, how do you think about potential for other big currencies to be moving this year and having implications for markets?
Yeah, we sort of liked at one point the yen. We liked it a lot because we thought BOJ is going to tighten and everything's going to normalize. There are political issues with China. They look like they might be calling an election, which would mean that all things are off. The Japanese haven't been behaving, and the yen hasn't been behaving as if interest rates are giving it much support. And, we look at Europe as well. I mean, they're supposed to do this big fiscal thing. Mm-hmm. It's not clear, other than Germany, who has the room to do it. And Germany's room to do it may be temporary because coming down the road, there are big fiscal deficits, pressures from transfers that are there. So we're very skeptical. And I'd say this, you talk to European policymakers. No productivity growth. You talk to UK policymakers, no productivity growth. I'm Canadian. Talk to Canada. Like 30 years ago at the OECD, I was, worrying about Canadian productivity growth for them. If it's the case that the US doesn't have a productivity growth problem, but everybody else does, that's not a good formula for currency strength, even if there's sort of an instinct in the market to say, look, we're sort of skeptical about Trump, we're skeptical about the dollar.
So you say there could be a reversal then?
Yeah, no, and that's what we're planning. We see euro going down to 112 by mid-year because we think that by then the data will be clear enough on the growth side and on the productivity side that just as we saw briefly last week after productivity numbers came out, people were saying, oh, wait a second, maybe this isn't so bad. That could continue.
That's fascinating consequences too, potentially then for the inflation journey in Europe. Thank you so much for joining us and fantastic to see you in person.
Pleasure.
Congratulations
thank you.
on the grandchild as well.
And thank you very much.
Enjoy the journey. Steve Englander with us, Global G10 FX Research and North American Macro Strategy, Standard Chartered. The US non-farm payrolls rose by a less than expected 50,000 in December, lower than November's figure and missing forecasts of a 73,000 increase. Revisions also brought totals for the previous 2 months down, with October's loss a greater than previously reported 173,000 jobs. The unemployment rate fell to 4.4% in December, lower than forecast. Speaking to our US colleagues, National Economic Council Director Kevin Hassett gave his outlook for the jobs market.
The bottom line is labor force participation has been moving forward, and it's not very long ago that it was way below this, and so our expectation is with wage growth as high as it is at about $3,000 this year for the typical manufacturing worker, that more and more people are going to come off the sidelines.
Coming up on the show, President Trump is reportedly considering military intervention in Iran as hundreds are killed in anti-government protests. We'll bring you the latest. Plus, Big Pharma could be poised for some big news with a raft of acquisitions expected during JP Morgan's healthcare conference in San Francisco this week. And we'll be joined by Tim Moe, who is Chief APEC Equity Strategist for Goldman Sachs, who says Asian stocks may start the year strong with tailwinds in the second half. That conversation at 7:30 GMT.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. But I'll tell you one thing, ladies and gentlemen, if any of you ever doubted the energy of the president, I mean, he's just blown away those expectations. Extraordinary. The president's fighting on many fronts at all times, including reportedly weighing military intervention in Iran in response to a crackdown by the regime on nationwide anti-government protests. Mr. Trump is expected to be briefed by top officials on Tuesday, but Tehran has already warned any attack would be met with a firm response. According to the US-based human rights activists news agency, more than 500 people have been killed during the protests, which are now in their third week, with thousands arrested. Speaking on Air Force One, the president criticized Iran's leadership, saying Washington is watching closely.
There seem to be some people killed that aren't supposed to be killed. These are violent. If you call them leaders, I don't know if they're leaders or just they rule through violence. But we're looking at it very seriously. The military is looking at it, and we're looking at some very strong options.
There's a line out from Abbas Araghchi, who is the Minister of Foreign Affairs in Iran, saying we are ready for war, but we're also ready for dialogue. So very interesting as things get ratcheted up on both sides of the world. Let's get to Dan, who is, of course, following this story from Dubai. Dan, good morning to you, sir.
Good morning to you, Steve. Well, you just heard there President Trump saying the United States is considering options in response to Tehran's crackdown on these anti-government protests, including the possibility of military action as well. The Wall Street Journal also reported earlier that those options included military strikes widening sanctions and also providing online help to some of these anti-government sources as well. Now, no surprises here to also see Iranian officials also issuing blunt warnings in response to Trump's threats. Iran's parliamentary speaker said any attack on Iran would make US bases, US ships, and also Israeli targets legitimate military objectives. So the war of words certainly heating up here. Meanwhile, as you can see on your screen here, Iran remains gripped by its most serious wave of unrest in years. What essentially began as economic anger has since turned openly political, and in recent days we've seen these protests ramping up and protesters chanting against the Supreme Leader Ayatollah Ali Khamenei and also the ruling establishment. Now, Khamenei has responded by accusing those protesters of serving foreign interests, he says, and also signalled a tougher security response as well. What we've also seen is authorities on the ground there imposing a nationwide internet shutdown too, which has essentially cut most international communications, which makes independent verification extremely difficult. We've also seen reports that security forces have moved to suppress those protests. Iranian state media says more than 100 security personnel have been killed. Opposition groups, though, based outside of the country, say the overall death toll is much higher, and it also includes hundreds of protesters as well. Of course, Iran has not released any comprehensive official figures, and as I mentioned, because of the internet blackout in the country, it's very hard to get a decent read on exactly what's happening on the ground right now. But this escalation also comes at a time when Iran's economy is already under severe strain. We know the sanctions are still in place, oil exports, of course, constrained, and years of isolation and underinvestment have created a really terrible situation for everyday Iranians on the ground. So it's a story we're continuing to follow that could potentially have regional and global economic and oil market implications.
Dan, let's just come back to the main point here around regime change. I mean, what are the chances, or is it likely at this point?
Well, Iran has a really unique system in place. Of course, at the helm of the country is Ayatollah Ali Khamenei. Khamenei, of course, is quite old. So evidently, the US view is that his tenure will not last. But what's more interesting is that the current leader, Masoud Pezeshkian, was elected to that position as a real reformer. He came to power on the promise of being able to lift up average everyday Iranians by improving some of these really difficult economic conditions on the ground. And the reality is that just hasn't happened. So Trump's threats are being welcomed essentially by Iranians who see a real lack of change on the ground inside Iran. And the question now is, whether or not this political pressure that we're seeing on Pezeshkian and, of course, by extension, the Ayatollah, will actually result in meaningful change. And at the moment, you do get the sense that this is going to be a very slow burn, because it's not as if Pezeshkian or the Ayatollah has come forward to say that they will enact some kind of change as a result of what is unfolding right now. So this is still a really active situation, very volatile, and of course deadly as well on the ground inside Iran. Big question now about exactly what happens next, and of course whether or not any kind of US military or intervention otherwise in any form would actually result in direct leadership change inside Iran as well. You saw what happened inside Venezuela. The US administration is emboldened. It also has oil as a foreign policy objective right now. Perhaps Trump is thinking one way, Iranians on the ground inside Iran are thinking another way as well. And of course, as I mentioned, a big question mark about exactly where this leaves Iran's leadership moving forward.
And great context there, and I think Iran, of course, is not Venezuela, but the market is skipping from one country to the next, seeing what Trump policy will have in terms of implications. Thank you so much for bringing us the background there. In the meantime, the Strait of Hormuz is once again back in focus as a possible US intervention in Iran raises the risk of Tehran disrupting one of the world's most critical energy choke points. For more, you can check out CNBC.com. And a look at how futures are setting up for the Monday session. We seem to be seeing sentiment shift into a weaker stage at this point. And don't forget, stateside, we're seeing that on futures as well. On the back of what was a decent run up last week, we had fresh records on the Stock 600, fresh records on the DAX as well.